to José Manuel Campa, who's the chair of the European Banking Authority. I'm very much looking forward to hearing his thoughts, and I might, if time permits, have 1 or 2 questions to pass on to him at the end of his presentation. José Manuel, good morning. Thank you very much for being with us.
Good morning. Thank you very much. It's a pleasure to return to this annual FinTech conference. Many thanks to you, Nicolas, and your team for selecting the theme of competitiveness as the focus of this year's program. For my remarks, actually, I would like to explore first the role of the financial sector in contributing to the competitiveness of the EU by providing products and services that serve the needs of EU citizens, businesses, and also the benefits that FinTech can provide in this context to enhance our overall competitiveness, which I think is fundamental. Let me first start with a few words on what I consider the notion of competitiveness to be, which is the key theme for today. Now, many of us will be aware of various measures of competitiveness for firms and very similar metrics also for industries. Most of these metrics are linked with the idea of competition and are inherently based on gaining relative, either firms or industries, relative to some other firm or economic sector in the economy. But the concept, I think, becomes a bit more tricky when we think about a country, or in the case of the EU, as supranational regions measure of competitiveness. In fact, should nation states be measured for competitiveness? And if so, how should that be the case? Now, of course, national competitiveness, I think, should certainly not come at the cost of other countries, either within the EU or globally. The World Economic Forum, which has been working on this idea of competitiveness since 1979, defined this as the set of institutions, policies, and factors that determine the level of productivity of a country. Others' definitions, I think, of competitiveness are subtly different, but they all generally use the word productivity at the core of the definition. In the same context, within the EU, according to EU Lex, and I quote here, a competitive economy is an economy whose sustained rate of productivity is able to drive growth and consequently income and welfare in its economy. Now, it's clear from these definitions to me that competitiveness has to do mainly with enhancing our own well-being by enhancing our capacity to improve productivity over time in a sustainable manner. Therefore, a key measure is to enhance productivity in our societies through open markets. And that's one of the key ideas I would like to highlight. In that context, the single market, the European Union, is the most important manner to provide an open market to enhance our productivity over the long run. And its contribution to the EU's long-term competitiveness can easily be measured in a wide range of indicators, spanning for our growth, our employment, and our social indicators. And of course, also going forward as far as we're able to succeed in the transformation driven by the digital and green transitions. I think that would be key. Now, complementary to that single market, preserving openness to global trade and open markets around the world will also enhance our continued ability to benefit in the future. And I think that should be another important driver of our theme. Now, a second key measure that I'd like to highlight to enhance our productivity, of course, is innovation. Very much at the core of this conference today. Technological and process innovations are at the core of what will sustain and improve our standards of living going forward. Now, what is the role of the EU financial sector in contributing to the competitiveness of the EU? So in these 2 dimensions, I think there are very important areas in which we should assess the performance of the financial sector in the ability to foster the single market and to enhance innovation. So let's start with the first one, the EU single market. Here, I think that everybody will agree that the financial sector is at the core of the EU single market. It has a crucial role to play providing funding for citizens and businesses in order to generate employment and to finance investment in new technologies, obviously in the transition of our economies, as I said before. Now, to perform that crucial role, the EU financial sector needs to function effectively. This required that it must be sound and resilient in the first place and adhere to high standards of consumer protection. EU banks have worked to enhance their competitive positions, and their capitalization levels today are very robust, with weighted average core equity tier 1 ratios of 15.8%, higher profitability, high liquidity ratios, and very good asset quality that remains robust so far through the cycle. Banks have been able to provide credit, assess risk, and support the economy even in the very difficult recent episodes of COVID and the peaks of geopolitical tensions over the last 2 years. In this process, financial regulation has also helped. In recent years, important regulatory reforms have been adopted in the EU that cover all these elements, particularly the single rule book that has developed deeply, but progress has also been made to foster supervisory convergence, especially within the ECB single supervision of euro area significant institutions. Now, the EU has been implementing this response to strengthen the single market, while at the same time preserving open global financial markets. I think the approval of the banking package late last year that implements the last part of the global Basel Agreement is a clear indication of that commitments from the EU to preserve open global markets. Now, of course, we at the EBA have always been strong supporters of this approach and are committed to execute in the coming years the large number of new EBA regulatory technical standards and guidelines expected from us out of this package. But let's be honest, we also know that more is needed. The single market for financial markets is still far away. In the banking sector, we know that cross-border banking activity has been stagnant for over a decade. We also know that we need to complete the banking union from a regulatory perspective so as to finally unlock the potential of the single market in banking. But beyond banks, work on the capital market union also remains, and these two projects, banking union and capital market union, should be at the top of our agenda to enhance our competitiveness from the perspectives of the financial sector in Europe. The second key axe, of course, in which we need to focus is the financial sector ability to increase long-term productivity through innovation and the introduction of technologies. In this area, financial institutions have launched a large number of initiatives to address specific risks arising from technology, but also to unlock the potential of the financial sector to improve its capacity to service citizens. Here we see that innovative technologies are being leveraged to transform front and back office processes via the use of cloud data storage, automatic credit scoring, risk modeling, and other techniques. Also, they transform the bank's distribution models, for instance, via remote customer onboarding and digital platforms, and they also serve the technologies to offer new products and services. But to take full advantage of the potential innovative technologies, it's necessary to establish common supervisory and regulatory approaches, both to the acceptance of the use of technology and to the governance of risk management. And here again, regulation, financial regulation particularly, has a role to play. We have also seen here progress in the EU in many significant areas, and quickly I can summarize, we went ahead and now have a Digital Operation Resilience Act, we have a market in crypto assets regulations, we have a consumer credit directive that makes a lot of progress on that area. We of course have a horizontal legislation such as the AI Act, and now today, particularly given the decisions or the hearings that are taking place with the co-legislation, we have a new AML package that has broadened its scope by introducing crypto-related providers into their scope. So all those reforms contribute to both resilience of the sector and to the confidence of consumers, investors, and counterparts by setting parameters for innovation to be leveraged responsibly. However, we should also be aware that the market is not static and we need to remain vigilant with new opportunities and risks that may impact the capacity of the financial sector to play its part in contributing to this long-term competitiveness. So if I may, let me give you a few highlights of what can you expect from the EBA in 2024 in this area of digital finance, broadly speaking, and innovation. As you know from previous events and my intervention at the previous events, you will be familiar to our statutory duty to monitor and assess market developments, including financial innovation going forward. Now, this role is squarely embedded in the EBA's strategic priorities for the next 3 years, where, just to highlight it, 2 out of our 5 objectives relate to innovation at its core. One of them is to set up and start DORA oversight and micro supervision, which I'll come back to in a minute. And the other one is to increase focus on innovation and consumers, and also to ensure a smooth transition to a new AML framework in the European Union, which I mentioned before. So let's start with DORA MiCA. Many of you have been following closely the process that we've been engaging to develop a large number of technical standards and guidelines, which is now coming to an end. You may have contributed your input as we went through public consultations of these different products, and I would like to thank you for your input very much. In parallel to this policy-related work, we're actively engaging now with the other ISAs and competent authorities to prepare for our oversight role for critical third-party providers under DORA, and we're also working with competent authorities to ensure proper supervision of issuers of asset reference tokens. This supervision and oversight work will start next year in 2025, but active engagement is already taking place to ensure coordination and proper preparation. For instance, for the case of ARTs and EMT issuers, we have created a crypto supervision coordination group with the involvement of all competent authorities to ensure that proper coordination across the single market takes place as these new players enter the EU market and expand its operations. Beyond the policy and supervisory work in DORA and MiCA, let me last focus on the work that we also will be doing in the area more broadly of technological innovation during the next 12 months. Here, I envisage thematic work from the EBA in 3 broad areas, which include, on one hand, tokenization, crypto, and DeFi. On the other one, artificial intelligence and machine learning, and then finally the evolution of value chains across the financial sector. So let's start with the first one, tokenization, crypto, and DeFi. We will be monitoring this area. We have identified that banks are increasingly leveraging distributed ledger technologies in their business processes and are exploring the possibility to issue tokenized deposits as a settlement instrument. Data from a risk assessment questionnaire exercise from last fall identifies that 62% of the banks responding are exploring, developing, and experimenting with using DLT technology, and around 50% of these banks are specifically exploring tokenization of traditional financial assets, including deposit tokenization. In view of these trends, this year we will be carrying out a stock take of potential models for deposit tokenization to inform supervisory dialogue with a view of promoting a common understanding of opportunities and risks, and developing also a common supervisory stance, as well as continuously monitoring this DLT use. We're also keen in this area to hear from you if you're exploring deposit tokenization, so please do contact my team via the EBA's FinTech Knowledge Hub, where this is being concentrated, this work. On crypto assets and DeFi, we will be reporting to the European Commission later this year on some activities that fall outside the MiCA, specifically crypto lending and staking. These are activities falling outside the scope of MiCA, and these are activities that have increased in recent years, although it's true that from a low base. Some risk of consumer detriment have been observed in this area, for instance, as regards to poor disclosures of terms and conditions, the existence of complex business models, potential conflicts of interest, and lack of clarity regarding enforceability of claims. So we'll be exploring these themes again with a view to identify opportunities and risks and any recommended supervisory or regulatory actions that may be needed. In the second area of artificial intelligence and machine learning, here the use of these techniques continues to grow, with a substantial majority of EU banks using these applications already in a range of business processes such as customer profiling, fraud, money laundering, and terrorist financing detection, and creditworthiness assessments. We're aware that many of you have questions as to how the requirements of the Horizontal AI Act recently approved apply to the EU banking sector. In light of those questions, this year we will take stock of this new AI Act and perform a comprehensive mapping of existing and upcoming prudential and consumer protection requirements on the use of AI in the banking sector, particularly focused on the part of creditworthiness assessments of natural persons. The objective here is to provide an assessment of the areas where additional guidance, clarity, or harmonization may be needed regarding supervisory expectations on the use of AI. So I expect that our report on this area will come early next year, and we will continue to monitor market developments as we go forward. Finally, let me address the third issue I mentioned, the value chain evolution in the financial sector. As you know, technology facilitated value chain evolutions, as we know from we know from the Joint ESA's response to the call of advice on digital finance that continuous monitoring is needed to ensure resilience in the system. This year, we will be focused on the growing phenomena of the distribution of banking products via white labeling to explore business models in this area. Beyond this area of thematic focus, as a final remark, I would like to draw attention to our ongoing efforts to facilitate dialogue between industry and supervisors on RegTech and SubTech developments, not only to foster the development of complementary technologies, but also to deep dive into specific cases that could support EBA and competent authorities in performing the new oversight and supervisory tasks under MiCA and DORA. This is important work to ensure that as a supervisory community, we too reap the benefits of innovation in the performance of these tasks and in other areas such as the Sustainable Finance Initiative. Overall, I believe that the EU's productive and accommodative stance towards digital finance ensures that the EU financial sector can continue to leverage responsibly new technologies to drive capacity and support citizens and businesses, and as a result, contribute to the EU overall competitiveness. So thank you very much for this opportunity to be with you, and I look forward to continue the dialogue in the course of the coming months. Thanks again for the invitation, Nico.
José Manuel, that was an excellent speech and full of a lot of substance. I think two things I just wanted to say as reactions. One is, first of all, the big thank you to the EBA for, as you say, the collaboration you've given to the industry in working through MiCA and the implementation of DORA. I think it's an excellent, best practice on how to collaborate and understand and implement legislation. I think the second one is I take note about the interesting report for next year on artificial intelligence. And maybe we can come back in the 9th conference on that particular point. But if I may, 2 short questions. One is, you did mention tokenized deposits and the innovation hub of the EBA in that area. Maybe just elaborate a little bit more, because it's still a fairly new phenomenon, and it'd be interesting to hear how that fits into the broader crypto and MiCA debate. And the second question is, so I know you couldn't cover everything, but one area that of course is taking a lot of attention at the moment is open finance, open banking. And I'd be interested to any thoughts you have on that in the light of the FIDE proposal that's going through legislative process at the moment.
Yeah, Nicholas, thank you. Thank you very much, and thank you for these 2 questions. On the first issue that you raised, tokenized deposits, I mentioned that in my initial remarks as one of the areas in which we would like to focus for this year, because I think there are 2 aspects that are very important to us. First, obviously, the technology is there, and banks are exploring that technology, and it's important as we see banks exploring that. And I mentioned that on our risk assessment questionnaire, when we ask banks, we see a large percentage of them exploring this as a potential possibility. So we need to assess what the potential of that technology is in that context. But beyond that, and you mentioned very well, we also have a piece of regulation that is MiCA. We also have other activities that are going on, like the establishment potential of a digital euro and a central bank digital currency. And tokenized deposits is another potential alternative that we need to assess to make sure that at least the regulatory framework, as we like to say always, we are neutral towards technology. We assess the potential uses of those technology based on its risks, rather than implicitly or explicitly through regulation, we end up choosing a particular type of application of the technology, which is another one that is not well risk-based. So that's our approach. We want to make sure that we have a fair assessment of what's the potential of tokenized deposits, what's the opportunities that it brings, particularly what are the risks, and how does it fit within these other alternatives that we already have potentially in the legislation. On your second question on open banking, I mean, this is an area which is dear to us as well. As you know, a big part of open banking comes out of the experience of PSD2. And, the events that we have observed over the last 5 years as a result of implementing PSD2, in particular areas in which open finance took place there, particularly in the area of payments. We have provided a large amount of feedback on this issue to the Commission. We saw a lot of that being included in the draft proposals for PSD3 and PSR. And I think that overall, without entering into details, we are positive on the experience that was developed through PSD2. We think that there is potential to extending, the idea of open finance beyond payments to banking and other product services. At the same time, we have to be aware that, and you know this very well as well, the implementation of PSD2 was not as smooth. It was quite a difficult agenda to put forward and to be able to implement, particularly in the areas more related to open finance. So we need to develop on that experience. We need to think about, what's the role that regulation has to play, what's the type of leadership that regulation has to play, particularly in setting standards ex ante, rather than asking the industry to find ways to set those standards, and whether that's applicable to all areas of finance, or which parts of finance, particularly banking, but beyond banking, other particular aspects in which we could continue on that agenda of opening up to technology.
Thank you very much indeed, José Manuel. I agree with you. Maybe more important than the actual legislation will be the development of the schemes and the governance of the schemes and the remuneration between the different parties. Very sensitive issues. And I think you're right, we can learn a lot from the work that the EBA and the Commission has done in bringing the industry together on the PSD Open Banking Initiative. Thank you very much indeed for being with us this morning and for those very comprehensive thoughts, and hope to see you soon. Thank you very much indeed.
Thank you very much for the invitation again. It's a pleasure to be with you.